You know the drill. You're up late and some ad is screaming at you, gold is the only safe haven in this crazy world. But then you see a headline from a financial regulator saying, careful, gold is a risky gamble pushed by fraudsters. So, what's the real story? Well, today we're going to cut through all that noise and get right to it. Does it actually still pay to invest in gold? Okay, so let's just start with this really blunt warning. This comes from the U.S. Commodities Futures Trading Commission, the CFTC. They've seen a huge spike in gold-related scams. And these scams are all fueled by these wild pitches promising you guaranteed, totally risk-free returns. So this isn't some random opinion, right? This is a direct warning from a major financial regulator. And this really gets us to the core of the problem. On one hand, you've got the regulators putting out fraud alerts. But on the other, you have really savvy, experienced investors who've used gold for ages to protect their wealth. So for you, the investor, it's a real dilemma. Who are you supposed to believe? To get to the bottom of all this, here's how we're going to break it down. We'll start by separating the hype from the reality. Then we'll dig into why gold has had this ancient appeal. We'll weigh the modern case for investing, explore all the different ways you can own it, uncover those hidden risks they don't always talk about, and finally, deliver the verdict. So let's start with what's happening right now. Gold prices have been hitting record highs. And, whenever an asset gets this hot, it creates a total feeding frenzy. It attracts the smart investors, for sure, but it also brings out the sharks who are just looking to prey on people who might not know better. But, to really get why gold has the place it does today, we have to look back. What is it about this shiny yellow metal that has captivated people for centuries? Long before the first stock was ever traded. Just try to imagine a world where money was literally worth its weight in gold. That was reality for centuries. It was the anchor for the US and eventually the entire global economy. But then in 1971, the game completely changed. President Nixon made a decision that severed the dollar's final tie to gold, and just like that, the gold standard was over. But here's the really interesting part. Even though the gold standard is ancient history, the world's most powerful financial institutions, we're talking central banks, the IMF, they still hold on to nearly a fifth of all the gold ever mined. That is a massive vote of confidence, and it tells you that gold still plays this critical, maybe quiet, but very important role in the global financial system. So that's the history. But how does all of that incredible historical weight translate into a modern investment strategy for someone like you or me? Well, it really boils down to 4 key roles that gold can play. The first role, and honestly the most important one, is as a store of value. Just think about it for a second. The gold in a 2,000-year-old Roman coin is still valuable today. Can you say the same thing for any paper currency from that time? Heck, can you even say it for money from 50 years ago? Gold just endures. And this example just says it all. Back in the early 1970s, an ounce of gold was worth about $35. And with either one, the ounce of gold or the $35, you could go out and buy yourself a sharp new business suit. Now, fast forward to today, that same ounce of gold, it can still buy you a very nice suit. But the $35, you might be lucky to get a new pair of socks. That right there is store of value in action. Okay, so building on that idea, here are the 4 main arguments. First, as we just saw, it can be a hedge against inflation. Second, it can hedge against a declining dollar. Why? Because gold is priced in dollars, so when the dollar gets weaker, gold's price tends to go up. Third, it's seen as a safe haven when things get chaotic. And finally, it's a portfolio diversifier. When stocks go down, gold often goes up, and that can help smooth out the ride for your whole portfolio. Now let's really zero in on that safe haven idea. Look at this chart. It tells a powerful story. Think about the period since 2000. It was rocked by the 9/11 attacks, the 2008 financial collapse, and while the stock market took a serious beating, gold wasn't just a good investment. For a lot of people, it was a lifeboat. Okay, so let's say these arguments are making sense to you. How do you actually go about owning gold today? Well, the options are a lot broader than just, buying a pirate's chest of coins. You could buy physical bars or coins, but then you've got to figure out a secure place to store them. Or you could buy a gold ETF, an exchange-traded fund. The easiest way to think about it is like buying a stock that perfectly tracks the price of gold. You get all the exposure without the storage headache. You could also buy stocks in mining companies, which have the potential for higher returns, but they also come with much higher risk. And finally, yeah, there's jewelry, but with those crazy high markups, it's really more of a personal asset than a financial one. But hold on, before you go and log into your brokerage account, it is absolutely crucial to understand that gold is not some one-way ticket to riches. There are serious risks involved that those late-night infomercials conveniently forget to mention.
First off, gold can be a total roller coaster. Its price can plunge just as fast as it can soar. Second, while it's been a great historical hedge against inflation, it is not a guarantee. There are long stretches of time where it fails to keep up. Third, its price can get tossed around by global political events that are completely out of your control. And finally, if you do own the physical metal, the costs of storage and insurance will absolutely eat into your returns. So let's be crystal clear about this. Gold is not a sure thing. History is filled with long, painful periods where it's gone absolutely nowhere or lost a significant amount of value. Anyone who tells you it's a risk-free investment is selling you a fantasy, not a financial plan.
All right, we've weighed the ancient history against the modern hype. We've looked at the powerful pros and the very serious cons. It's time to bring it all together and figure out the bottom line. Here it is, side by side. On the pro side, its incredible history, its role as a hedge and a safe haven, and its power to diversify your portfolio. But on the con side, its wild volatility, the real costs of owning it, the fact that its performance isn't guaranteed, and that a bar of gold pays you absolutely nothing. No interest, no dividend. So as you can see, this is not a simple buy or sell decision. And this really brings us to the main takeaway. The modern role for gold in a portfolio isn't about trying to get rich quick. It's about seeking balance. It's a tool that can potentially reduce the overall risk in your portfolio and, maybe most importantly, preserve your capital over the very, very long term. So, in the end, the question isn't really, is gold a good investment? The real question is this. When you look at its unique strengths and its unique weaknesses, is it the right investment to help you reach your goals? Is it the right tool for you?